Welcome back. Let's bring in our all-star panel to discuss everything that's swirling around with the markets today after what's been a really busy week already. Michelle Caruso-Cabrera, CEO of MCC Global Enterprises, a CNBC contributor. Ryan Dietrich is Chief Market Strategist of the Carson Group, and Marco Papich is the macro and geopolitical strategist for BCA Research. Welcome to you all. So much to get to. But first, Michelle, you're here on set. It's so great to have you.
Pleasure.
I got to start with the news overnight, and that's that we've got an aircraft carrier, a second one, headed to the Middle East amid Iran talks right now.
Yes, because President Trump is making clear that during these negotiations, if he doesn't get a deal that he likes, he's willing to use military action again. That's certainly the message that he is sending after we saw Operation Midnight Hammer, where we've already bombed the Iranians' nuclear facilities, and after taking Nicolas Maduro in that very dramatic arrest. I think he's signaling that there's more to come. And now, after those two events, the Iranians can hardly doubt his will.
Yeah, you know, Marco, one of the things that's been flying below the radar were these comments from Treasury Secretary Besson. He's going to be on Squawk Box a little bit later this morning, but where he basically said that they had used the dollar to help trigger the protests that we've seen in Iran right now. And just given some of the moves we've seen in the dollar overall and the debate around it on the global stage, your thoughts?
Well, I think there's many reasons that the dollar has been declining for the past 12 months. And I don't think that it's necessarily because of its use geopolitically, although, of course, that did trigger a huge gold run since really January 2023. I think the bigger point that you're making there is that there are significant protests in Iran. And that was not the case throughout 2025, particularly when Israel attacked Iran, when U.S. followed up. Iran felt a lot more stable and domestically coherent. Right now, in early 2026, I think that they're feeling a lot more vulnerable. So they're backed up to the corner, and that could make them very dangerous, unlike in 2025. And that's what I think is different, particularly market action as well. Oil prices did sustainably rise this time. They didn't last time. So I think that's something to watch, that domestic stability.
Yeah. I mean, Ryan, oil prices are fractionally higher this morning, but we're down on the week. But when you talk about the risk-off nature of what we've seen in the market this week in general, how do geopolitics factor in, if they do?
Yeah, first off, happy Friday the 13th, everyone. Hope everyone has a good long weekend. Yeah, that's right. So think about that. Yes, the geopolitics, I mean, they're there. That's nothing new. You know, we're not minimizing it, but I guess you just look at what's happened just this week. Yes, the S&P's down a tad. Most stocks are higher. Just literally 2 days ago, right? Various advanced decline lines at all-time highs. You've got really strong earnings. And I want maybe wrap it up like this. The S&P 500 is up 9 months in a row on a total return basis. The Dow is up 9 months in a row. You know, these are long streaks. We're in February. Historically, February is, we've been saying, that banana peel type of month. We do not think this bull market's over, but maybe the second half of February, which is kind of weak, we got put to call ratios a little optimistic. Some various sentiment polls a little excited. Maybe we're due for a little banana peel slip here, you know, 5% or so. I don't think it'd be anything more than that, Morgan, but those fundamentals are still really solid. We're still in the bull market.
Yeah, we got about 3.5 minutes left. We're going to lighten around style. Michelle, your thoughts?
Just that we've gone from the greed part of the market. Now we're deeply in fear. Suddenly everything is either a Netflix or a Blockbuster. And I don't think that's true, right? Not every AI company is going to destroy every legacy company. And you're going to have to pick and choose. But the market has just been so indiscriminate in the destruction this week.
Yeah, Ryan, I want to get your thoughts on this since you are so bullish overall, even if we are slipping on a banana peel here on Friday the 13th.
Yeah, you know, one thing that's neat, adding to what Michelle just said, look at the XLK, right? The big ETF for technology. Short interest on that has absolutely soared over the past month, one of the highest levels we've seen in years. Now, that's not surprising. What's everyone talking about? All the negative stuff with technology. But if everybody's thinking alike, somebody isn't thinking. General Patton, I like to use that one. I don't think it's going to be that simple. You know, I know values had this incredible run. And the money we run at Carson Group, we've actually added a little bit to, you know, kind of technology and some of the software names. We've been getting some really good valuations. Last comment, software valuations cheapest have been since 2013. Yes, sometimes things are cheap for a reason, but I don't think they're going to, you know, I think they're unfortunately hitting everything here. And there's going to be some opportunities. Deja vu, right? Last year we saw this in February with DeepSeek. I think we're going to look back in 6 months and say, wow, this was an opportunity for bulls, specifically maybe some of those technology names.
Yeah, we had a guest on yesterday use the term sassacre. I thought that was pretty good. Marco, I want to get your thoughts on this. Also want to get your thoughts on some of the dynamics we're seeing play out here with trade, especially as there have been so much chatter about whether and when tariffs funnel more significantly into CPI.
Yeah, so first of all, I agree with Ryan that there is still a bull market. My concern on an imminent basis is more the Supreme Court decision on tariffs specifically. I think that could shake up the bond market and thus the equity market. Look for that at the end of February. On the trade side, I think that President Trump is struggling ahead of the midterms to really respond to the affordability issue. And so I do think that you should watch very carefully for more tariff relief. We're at 14.2% overall tariff level. I think by the end of the year, we're closer to 10 than to 14%. You know, it's not a huge decline, but it's going to be a helpful form of fiscal stimulus. I do think that with China in particular, there is going to be a big bank deal this year that may include a currency component, which will put more downward pressure on the dollar and a lot more on CNY.
Michelle, your thoughts, especially as we look for inflation reading this morning?
Yeah, that would be important if there was some kind of deal in which what he's implying is that China would strengthen its currency. We haven't seen them being willing to do that in decades, but perhaps they will. That would actually help dramatically when it comes to the concerns that President Trump has about the trade deficits that we face.
Yeah. So if we put all of this together, Ryan, final thoughts as we do await the CPI report, which is sort of the big one for today. We do go into a long weekend here, President's Day weekend. How do you position yourself? How do you think about the markets and this, given everything we've seen, all the volatility, which is still VIX still elevated at 20?
Yeah, we'd still stay overweight equities here, but diversified. I love what Japan did this week, right? Japan said they're going to spend a lot of money. They're going to do a lot of tax cuts. Developed international has been strong. Emerging markets, look at the emerging market earnings, which have been soaring. Have overweight equities, but again, diversify it and look around the globe. There's still a lot of opportunities to this global bull market we're in.